And we're on. All right, welcome back, folks. Here we are again. This is Real Life Real Estate Investing After Dark. Real life real estate investing, where we talk about real life real estate situations, where we bring you real life real estate solutions. And I should be looking up at the camera instead of that. My co-host tonight is Miss Lorraine Beato of
Like,
Wired.
of Wired. Okay, like of Wired and Atlanta's residences. There you go.
And we have she's like she about to rap. It's Jessica.
I know, right? I'm about to spit verses. Yes, Jessica of American Mortgage Network. I'm a loan officer.
Loan officer. Okay.
Lender.
And Miss Jessica is going to share with us some of the great stuff she's doing in the lending space and how much money she's going to give us all to buy all the real estate properties that we can buy. And we are sponsored by Mr. Andrew Gurvey of Gurvey Law, who is our are you going to be our engineer for the night? And so he's engineering ish for us for the night. All right, so shout out to Andrew Gurvey. So Miss Jessica, tell us, what do you do in the lending space and how can you help us as real estate investors?
So yeah, great question. So I am actually a lender. Formerly title is loan originator. Basically, when you go to get a loan, you have to have a loan originator start off the application process. The bank, there's too many people involved in one loan transaction. So you really don't have a person unless there's a loan originator to be a point of contact. About 20 to 30 people can be involved easily in one loan transaction. So if that's the case, well, who's the person that everybody goes to with questions? Who's steering the ship, So with that, that's what I do, and I'm mortgage broker as well. So what that means is I have my company that I get products out of, traditional stuff, and sometimes, unique products. But then I have the ability to go into the loan origination system, LOS system. I get a password, got to sign on, and I can go into Rocket Mortgage's system and pull their products and utilize that for a client. And I mean, everything is, done the proper way. It's just that you really don't even know, but you're benefiting so much from that because I can use their product to save people money or do products that I don't necessarily have, but might still benefit you. So say you might buy a house from me, but then you want to turn around and buy an investment property. Well, if I have only limitations to do that one house purchase, you might have to go to another lender. And that can be like really stressful, right? Like you don't want to like meet strangers off the street and, rely on them for everything that, they can screw up at any point in time. So with that, you can still utilize me and I can get other products for you to be able to still use in further transactions beyond the one we did. So you can just keep coming back to me. That works, and I think that it's just been such what I call a game changer. I think we're going to find in the next 5 to 10 years, we got Chat GPT, AI,
Yes.
all of these other pieces to try to like bridge gaps and cut out a lot of like middlemen and a lot of like people having to do like the legwork themselves. And I think the mortgage brokering world is going to like be a game changer for lenders or loan originators to expand their comfort zone and get into a space of learning other lenders' technologies and portals and systems as well as their products to be able to just provide a one-stop shop as opposed to them going on each individual's lender's doors and knocking on their doorstep trying to understand their products and doing another inquiry. Like I can literally take one credit report and shop at 12 lenders. So that's a lot more less of a hassle for a client than them having to do it themselves.
So tell us, when you talk about products, what do you specifically mean by products?
Okay. So yeah, great question. So you've got like your traditional products, right? So that's FHA, Fannie, Freddie, USDA, VA, right? Everybody knows those guys. Those are the agency products, government, private sector products that we all know. Low down payments, they're backed by mortgage insurance so that you can have a low down payment. But then you've got people right now. I mean, we've got like influencers, we've got entrepreneurs, we've got investors. These guys are off paper, in the traditional W-2 format. So you've got the bank statement loans, which I can do for self-employed people. That's business and personal bank statements, 12 to 24 months. profit and losses can also be brought into the equation to base the income off of. You've got the 1099s. So I can take a 1099. The only catch is they got to be with that employer for at least a year so that we can really capture what they're going to be making in the future. Because we use the past to predict the future when, they're self employed like that. You got the DSCR loan, the true verbiage is debt service coverage ratio. And basically, there's no stated income. So we just base it off of the house, almost like a commercial loan. You've got the HELOCs. I can do HELOCs as well. It's home equity lines of credit. Um, you've got second mortgages. So that's the fixed version of the HELOC. So instead of you having like a giant credit card, it's like a fixed loan that's just tacked on to your original. So you don't have to change the terms of it to borrow money against your house.
Mm.
So that you can avoid having to change that 3.75 you might have had 4 years ago to right now a 675. But you can still take money out and keep that same rate and keep that same product the same. And then you've got land loans. I do land loans, construction and permanent, and I can do commercial loans. It's just, it's going to be a short term product, more like a bridge loan, which is basically a short term commercial product that has to be refinanced after a certain time frame, like a hard money loan, so that you're just basically getting the money up front to close a lot quicker than having to wait 30 days. So, I mean, I have a plethora of products. It's just understanding them all. Right, Rocket Mortgage is, pretty cool right now too, because they actually have like a specialized product where they give them away grant money and additional credits towards closing. I use them. And so I just, honestly, I like walking through walls. That's pretty much what it's like. So
Okay.
I have a good time.
So let's talk about you. So you mentioned a HELOC.
hmm
Now, is that something if I can take a HELOC out of an investment property, or does it have to be a primary residence?
So you can take it out of both as long as you own the home. You can take a HELOC out on it. My thing is that I love to, because I have options. I can be honest. Okay, when you have lenders that don't have the options, they can only lend out of their home. Then they start to tell you that if you can't get it from them, you can't get it anywhere, and that's just
Mm,
not true, right?
okay.
So
Okay.
now I'm focused away from the attention of myself and putting it on the client, and I'm trying to meet their needs as opposed to trying to meet mine. So with that, a HELOC to me is more of a, to be honest, I think it's a construction and builder's product. I think that, with that type of product, you want to have heavy cash flow coming in to pay that thing back because
Definitely.
you're only going to be paying on the interest. So principal is never tacked into, and it has usually like a 10-year term on it. So you're going to be making monthly payments at bare minimum, just like a credit card. And if you don't pay above that amount, you can get caught up in having a large lien put on your house because it can get away from you really quick. So I don't recommend it if I have a second mortgage to give, which is a fixed rate loan that just tacks on to the original mortgage instead of us having to do a whole refinance where we lump it all together. And so that way you actually can just pay that monthly payment every month. You know what the fixed amount it is. And as long as you pay it, it's going to pay itself off and there's no problems. So having all these options just gives me the ability to be more forthright.
Okay.
So yeah.
So how does credit play into a factor for a HELOC or the DSCR? Because you said I don't have to prove any income. How
hmm
does the credit play into that?
So anytime they're not looking at income like that, or anytime they're giving you a specialized product, credit score is heavily weighed into. You want to make sure that you're showing the bank that you have the ability to manage this kind of like asset. You want to make sure that you can show them that if given terms and a particular loan repayment, you're going to honor that and you can meet the demands. And so typically how we see that is through a credit scoring model. I mean, it literally tracks algorithms and scales and stuff to allow us to see that you pay your bills on time and you haven't had problems. So those types of products are really like leaning into 680 plus FICO scores.
Mm,
That's where you want to be at in order to get the best terms for those products.
okay. Okay. Good stuff. Good
hmm
stuff.
Yeah, so it's definitely a lot out there. It's a lot that people don't know, and I really try to be like a resource for information because I'm aware, like the stuff that I had to learn. I mean, I've been licensed since 2012,
Wow.
so my industry is like everybody. When I graduated from college, I got into it, and everybody was older than me and looked at me like
They're probably
Do you
still
even, do you
probably
even
still
know what
older
a
than
house
you.
looks like? You know,
They're probably still older than you.
right. I mean, honestly, like, and so being so young, I got thrown in the water. Like, I mean, it's a very, very difficult learning curve. But once you understand it and once you get comfortable with the discomfort, it just becomes a really great ability to help a lot of people out, and I just try to impart knowledge on them because here's the thing: the more informed a client is, the smoother we can work together, right? Because
Absolutely.
if I ask you for a document instead of you going, well, why do I have to give you that? And what does that mean? And all that, you kind of go, I get it. Let me find that. Let me contact it. Because if they ask for it, if they condition me for something to ask you for, they know it exists. So there is no, it doesn't exist. I always
Right.
get that, right? Like I'll
Right.
be like, hey, I need this. And they're like, oh, that doesn't exist. Yes, it does. Because the underwriters, right? They're usually previously loan officers, and they had to be seasoned into that role, kind of like a
Definitely.
politician. So they've seen a million files, and so they know that company gives you that, and so they make you dig. And as long as the client is clear on understanding how the process works and is clear on understanding that they have to do a little bit of pushing on the world to get what they want, it makes it easier for us to close you quicker. I mean, I don't close files in less than 3 weeks.
Wow.
Everything that I've closed has been 2 to 3 weeks. So I'll be sitting there and the closing might be 2 weeks from now. And we're just already at a clear to close. We're just hanging out here. As long as my
Wow.
client doesn't do anything crazy, he's got a house 2 weeks in advance of knowing that he's getting keys. So
What's crazy?
what?
What's the craziest? What's the craziest thing you've seen a client do
So you can share
in
some stories
2 weeks' time? Clients don't do anything crazy in 2 weeks' time,
I'll
right?
say I
You
got
know,
one for
Clients will do stuff like, I'm gonna go get a car.
Yeah.
You what?
Well, they're celebrating being able to buy a house. They're closing in 2 weeks, and they go buy a car, right?
Yeah, no. So don't buy cars, don't take out credit cards. Like, wait until you sign on the dotted line. You got the keys in hand, and then you can do whatever you want.
What about that $15,000 furniture
No,
loan
I
that
was
they're
saying no
gonna?
furniture either.
Crazy
No
financing
furniture.
furniture. I'll have people like, yeah, like they'll try to like buy furniture before they even get like keys, and I'm like, oh no. You're putting the cart before the horse, like seriously. So that kind of stuff. I've had people wire funds from maybe a person that wasn't authorized to wire funds from that account, like. Yeah,
we just
is
had
that
a
happening?
conversation.
Yeah, like a person was like, "Yeah, I paid my earnest. My boyfriend paid my earnest money. Who is your boyfriend?
Right.
Who? Who? It's like because when we talk, I'm like, listen, they have to trace all money used. That's how about this? If you look at it like this, the underwriters and all that are designed to look out for mortgage fraud. That is what they're here for.
Yes.
So what happens is when you come into the table, you are guilty, and then you have to prove your innocence.
Wow.
Okay.
That's
So
a way to put it, right?
mhm, it's not the other way
You
around.
didn't drop the clues bombs over there for that.
hmm Yep. So with that, I end up, saying like, hey, I know it's a tough pill to swallow, but they're looking at you skeptically until I present information to like basically make the argument that you're like a legitimate person. Like this is you, everything is good to go. And that's what makes me a good loan officer is I gather everything up front. I learn you before you go before them. I'm like an attorney almost. Like, sit down these consultations. You send me documentation, I'm gonna look at it, right? A bad attorney doesn't look at anything.
Right.
I know some people
Right.
that have lost in court because of that.
I want to just point out what you said right there, and oftentimes and I've seen this more times than I'd like to count, when people come to get loans
Mhm.
and you're representing them, and many times they don't get that you're representing them, and you have to make the case for them to close on the deal, and they give you pushback.
Mm,
Case in point, that doesn't exist.
right.
Right, and you have to present to them if this is something they want to do to get the deal. If they want to get the deal closed, this is something that they have to do.
Right.
And I think the thing that's often missed is how much you do to represent them to get the transaction closed.
Mhm.
Yes, of course, you're doing it because you're going to make money to do it.
Right.
But one of the other things that you also mentioned, and I believe a lot of times in the space that we're in, especially as an investor who happens to be a coach,
Mhm.
as a realtor broker who happens to be an investor coach as well, and you being in the space that you're in as a lender, like many of the things I think people that are coming into the space miss is that we represent them,
Right.
and we have to paint a bigger, better picture to get the transaction closed.
Hmm.
How would you, what would you say to a person now presenting it that way? Because most people don't think about it that way.
Hmm.
What would you say to someone, like maybe on the front end, or maybe you've had this conversation already on the front end, to help them understand that you are representing them and you're helping to get them closed?
Right.
How's
Right.
that conversation go?
So that's interesting, and I'm glad you asked that. So, before I actually got into being a loan officer, I was always in sales, and I literally have been so good at sales where I actually sold a flat iron to a woman that had no hair.
Wow.
Yeah, honestly.
Did you sell her the wig too after she got
It was crazy.
that?
Like it was probably like I always tell that story. And so I think like the biggest thing, like when I actually take calls from clients, like new clients, like I've never talked to them before, I don't even talk in front of the computer. I'm not doing any of that. I'm probably like driving. I'm probably walking, up and down the road just trying to like get a workout in. Because it's a person to person interaction you have to have first.
Yes.
You have to
Yes.
trust me, right?
Yes.
And the conversation has to get there first. And then after that, you will understand what I'm doing and just follow my lead. You know, a large part of this business is trusting your loan officer. So you have to make that relationship. And, the work that goes into me actually helping it's crazy when I tell you 20 to 30 people are involved in a file. Who do you think is managing those 20 to 30 people? Right. So I'll have to sometimes call your HR company, not mine, and get people to do their job. You
Mm.
know, I'll have to sit there and fight for your loan. Like people don't understand how many times your loan almost gets turned down.
Mm.
Because I'm not going to call you and stress you out, right? Because there's nothing you can do about it, right? So a lot of the times behind the scenes, it is a lot of me pioneering and fighting for you. And you really have to have that first conversation and that introduction and feel me and feel what I'm saying to you and feel the connection I'm making and believe in me before we can go forward and be successful, because that's where it starts. I mean, that's why I don't get into the calls like, traditionally, like I remember I was like trained and they would be like, okay, you're going to get in front of your computer. You're going to say this script right here. And I was terrible at that. Like
Where's
I
the
would,
where's the human
yeah,
like the
Yeah.
emotion, like sometimes like this is an emotionally charged situation for a lot
hmm
of people, and you have to kind of meet them where they are when they're clearly not understanding
right,
how the process works. So I
right.
get it. I mean, you have to
It's a
have that
lot.
interaction. Yeah.
It's a lot. Like, have you ever heard of the saying, or it's not a saying, it's more so like a concept that, abuse, physical abuse is not even as bad as emotional abuse. Emotional abuse carries longer. So, if
That's a
that's the
bar. Did you
case,
came and hit a rap for real, did you?
yeah, I mean, it's real though, right? Like emotional abuse, it has far greater damage than a bruise. A bruise is going to heal probably in like, a couple weeks, but an emotional abusive relationship, you have to go get counseling. It takes years for people to heal from that.
Yes, yes.
So,
I'm still healing from some stuff myself. Give me a moment.
you
I'm just kidding. I'm just kidding.
know, you're gonna get in trouble later.
I hope
So
nobody's watching.
literally,
They should be able to bed by now anyway.
so literally, like, in this business, it's an emotional, business, and you really have to understand that. I understand that you are nervous. I understand your drawbacks. I understand your challenges.
Mm.
But you also have to understand that the work that goes into me contacting these people, getting people not responding back to me, not caring about your loan the way I do.
Mm.
That is the hardest part. Like when I talk, I'm the only person. I tell them that I'm like, I'm the only person that's ever going to talk to you face to face. You're not going to talk to a processor. You're
Mm.
not going to talk to an underwriter. All the people involved in your file, closers, all that, they're not talking to you directly. They don't know your story, right?
And most of the time, they don't even know that these people exist.
Right.
Everything
And
is your fault.
yeah, it's always my fault. And all of that pressure can be enormous. And it helps if you just trust me and you support that process and you support me knowing what you need to have in order to close and getting you there and understanding I'm one of the few people in that transaction that cares, right? Because I don't get paid unless you get a loan. Everybody else still makes an hourly check. Okay.
Yeah.
So as clear
That
cut and
part.
blunt as that is,
That
you have
part.
to understand that I'm tapered to you. So if you don't succeed, I don't succeed, and I succeed. So,
Definitely.
on the front end, I'm very big on like, hey, let's develop a relationship. I want to make sure you trust me. This is my cell phone. This right here. I have one. I don't have two. And you
That sounds
contact
like a little
me.
shade there. Those my cell
I mean,
phones
I
right there.
did have two, and
That's
it
kind of
ended
a
up
little
in the trunk
shade there.
somewhere.
No, Jessica
And
come
it
here
started
throwing
slipping out of
shade
gym
because I
bags.
got two cell phones. I don't know.
No, it's
I don't
okay.
know how
If
to
you
take
can do that, bro, listen,
Well, thank you.
more power to you. But,
I
I
actually have
can't.
3, by the way, but I
Jeez,
don't
like
carry them
I
all.
can't do it. Okay, so literally, I do that because when my clients contact me, I'm responsive, and I say things, because I understand how it can feel on the opposite end, not knowing, and that person sees, but you don't see, and you're freaking out.
Mhm.
Like, I
Mhm.
mean, we are in a society right now where anxiety is actually like one of the number one diagnosed things or issues that most people have. And imagine a person sitting there not knowing what's going on, and they just haven't heard from you, and you're just not saying anything, and they're wondering, did you get my document? Did you look at it? Is it gonna work? And you're not saying anything. And so I try to like continuously hold hands. I try to remember that I've been you, right? So with that, I'm really responsive, and I actually look at the documents,
Mm.
because when I look at that's how I close in 2 weeks. Because when I look at the documents and I put files through, it's clean. When my conditions come back, we're waiting on appraisal and title.
Uh,
Underwriters like me,
I
and when
want to
they like you, they treat you better.
I want to give you an opportunity to kind of get a little bit deeper, dig a little deeper into what that process looks like. But I will first want to say thank you for the people that are joining us here that are streaming live, and then we happen to have an
An
audience.
yes, it's
We happen to have an
awesome.
audience in the house. I want to give the audience an opportunity if y'all want to interact. If y'all got some questions or anything that y'all like to add to what we're talking about. Um, that's why I asked y'all to hold off. Because I know we got some experience in the room. If there's some questions or some input that you all want to share with us, please do. But I want to also give you the opportunity because you talked about a clean file. You talked about the processor, the EA, and all those other people that are involved in that process.
Right.
I was a loan officer for about 5 minutes. Um, I dealt with a
It's
lot
like I
of that.
got in that thing, and it was too hot.
Yeah,
I
I
got
was in.
out.
I was in and out. I was in and out real fast. But I want to kind of give you an opportunity to give the folks a kind of a clear understanding of what the file looks like. I mean, I know it's a
Right.
lot of stuff. You don't have to name everything, but just kind of give them an idea of what the file looks like. So when you're asking for A, B, C, D, and 3 and 4 and 5, and 2 bank statements and 2 W-2s and all these other things, um, give them kind of a breakdown, if you can, of the process
What
of
that is.
collecting that data,
Mhm.
who it goes to, and then where it goes to beyond there to underwriting. Can you share that?
Okay, yeah, absolutely. Okay, so you got 4 areas to an application. You got your residence history, you've got your credit report portion, you've got the income, and you've got the assets. Okay, so that's all of the 4 areas that they're going to be looking at to qualify you. When I'm going through a file, I'm going to start off, okay, residence history, for instance. They want to know where you lived the last 2 years. Based on your answer, I'm going to know if I need to ask you for additional documentation. For instance, if you say to me, oh, I lived with my family, they didn't charge me rent. Okay, well, I need a letter of explanation that tells us that your family did not charge you rent. It's not so much so that they're going to count that against you. You're not going to get in trouble for that. It's just that they want to know that you are used to paying a bill that is related to housing.
Real talk.
You're asking us to give you hundreds and thousands of dollars to be responsible for paying us back on housing. So they just want to compare apples to apples and
They
see
want
how
to make
you
sure you pay
perform.
auntie on time too.
Yeah, like you got people who don't pay renters, and like, you skipping out on landlords. So why would they give you a loan if you don't
Right.
pay even landlords back, right? So that's why they want to know that. So based on your answer, it'll let me know how I need to pivot, right? And then from there, I'll ask you for the documentation based on guidelines because each product comes with guidelines. So for instance, have you ever seen the model where it's like, if you answer yes, this is the way that you need to follow the chain of the model. You
Yeah.
answer no, this is the way you need to follow. Well, it's the same way when it comes to loans. Based on the guidelines, if you tell me, hey, I've been living at my aunt's house while I'm saving up to buy a house, she doesn't charge me rent. Okay, well then based on that, you don't pay a monthly expense for rent or housing.
Mm.
Now I need a letter, right? If you did, I don't need a letter. I need a lease. I might need 12 months payment history, depending if it's FHA or conventional, right? So I need to see these things based on your answer. Now we go into the income portion. Here's a fact that a lot of people, I don't know if they know, I don't know if they didn't know, but I'm going to say it. The loan is based on your income, it's not based on the house. The house is collateral to secure the loan. So, however much you make is how much house I can give you. So I go into the income portion. I'm going to ask for last 2 years W-2s because they want to know where you've been the last 2 years. If you haven't been working for 2 years, they want to know that. It's not to say you won't get a loan, but based on guidelines, this product may not allow us to be able to give this loan to you. I might need to switch gears. So I need to know that answer because they're going to want supporting documentation because they want to see you have the ability to carry on a reliable job for 2 years at least to be able to make sure that you're going to keep a job to pay this loan back, right? Your last 30 days pay stubs, that's where I'm going to base how much you actually make in the actual calculation for your monthly income. So if you're salaried, we're going to divide that by 12. You paid bi-weekly, we do a whole different model, 26 weeks. You know, you're hourly, we're 40-hour work week, and we're trying to figure out, okay, are you working every 40 hours a week, and is that year to date adding up, right? So I'm trying to make sure that we calculate all the money accurately, because if those numbers are off, that's how you have deals that don't close.
Mm.
So if the lender doesn't know how to do the math based on guidelines and supporting documentation, it can kill a deal. So I'm very thorough on that part. Then you get into the credit report portion. I pull your credit report. It's the only credit report that's like it. So you have to have a license to access that. You got your Credit Karmas, you got your Experience, you got all these like third party intermediaries that are private, and they try to do something close. It's kind of like going and go get hair products. Like if you're not licensed, you cannot walk in Cosmoprof. I tried it. I walked through the door. She's like, "Are you licensed?" No. Okay, you gotta go. I can't sell anything to you. I can't even sell you a pack of gum up in here. Oh, okay. So yeah, gotta have a license. So yeah, the credit report that I see is the only credit report that's real and exists, and is the one that's the official,
So
right? It
Credit
costs
Karma said I got a 9.95. So that's not true.
that's like going to Vegas and somebody telling you put your quarter in this slot machine, you're gonna win the money. Try it. We'll see.
I have a
Yeah,
9.95
maybe not.
credit score on Credit Karma.
So that's exactly like that. Like sometimes those reporting agencies, or those reporting companies, they get it. Sometimes they're way off. So I tell people, I'm like, okay, I'll hear it, but I got to see it, because I honestly have had like that kind of discrepancy, right? You can't base everything off of that. So once I pull it, I can see everything and I'll share it. And those are like $75 a pop, and they keep going up. And it allows me to see everything from the inquiries to the address associations to your liabilities, and they're looking at all of that in your scoring model. So I have to have that. And sometimes the things that I see on the credit report, like I might see you pay child support, so I might need a documentation for that, right? I might see on your pay stubs too. So, and then also you've got something like American Express 30-day charge cards. So if I see that, I need to make sure you have enough assets to where I don't have to assess a monthly payment. You might have student loans, right? And based on the product, I might have to assess a monthly payment if it's a zero balance. I mean, you're not a zero balance, but a $0 monthly payment, right? So these things, once I see it, I know what direction to go in again. And then you've got like the assets portion. So here's the part, right? And I have to just say this. Stop hiding money from your lender, right? Your loan officer is here to help you. The more money you show the bank that you have, the better. Hiding money from me doesn't help you. If you've got retirement accounts with like $10,000, $20,000, listen, I'm not going to take your money from you, and neither is the bank. We don't take anything you don't want us to take, okay? We're gonna make sure of that.
I don't want you to make my payment go higher if I show you I got $30,000 in
And
the
that
bank.
is so crazy, because here's the part: reserves and having extra money left over. So what is a reserve, right? It's the monthly payment amount that you have based on what you have in your balance. So if I've got $7,000 and my monthly payment is 2, I have about 3 months reserves. Okay.
Mm.
So that's what it is. It's basically telling the bank, after I pay for this loan, I actually have money
I'm still good.
to be able to make
Yeah.
sure that if shoot, I lose my job, I go, I get sick and I don't have any vacation days, I can still pay you guys. And that looks good to a lender. The more the merrier. Like, you want to show the lender everything. Me personally, I'm always going to try to like save you money. So I'm not the person that's going to go in and go, oh, you got $60,000. Oh, we're going to use 58. No, I mean, honestly, like, be honest, like, everybody gets paid off your loan amount. The higher the loan amount, the better for us. So it doesn't benefit me to throw more money at your loan to pay down the loan amount, to be honest. So if you understand that
Real
concept,
talk.
you
Yeah.
will realize that showing the lender more money isn't going to necessarily put you in a position where they're going to spend it all, because it doesn't even benefit them. If they have to, they have to, right? Like, if you end up having a debt to income ratio issue, which is the gross monthly income divided by your debts on credit. If you have that and it can't be over 50%, if you have that, then that's different and we have to pay it down. And I will explain that to you, right? But if you don't show me, you're going to get a no, because I don't know. It's KNOW because you gave me an NO.
Mm.
So make sure that it's not a KNOW on my end. It's a
Jessica
true
got
NO.
bars for days up in here, don't you?
I mean, because you know what? That's like sales, right? Like, I had like sales mentors. They were like, your client tells you no. It's not because they might not, they're telling you no as a firm understanding. They might just not know.
Yeah.
They might
right.
not be informed. So the quickest answer to give when people don't know any better has been traditionally no.
Right. Right.
So, for me, that's why I'm like, hey, just show me all the money and then let me work it out. Let me talk to you, and so I look at bank statements, and bank statements, I actually go through them. Anything over $1,000, I have to look at. Right. So if anything that's like a repeating transaction, I have to look at. Like, I'll have clients that might be on child support, right? And they won't tell you. So this is what happens. If a lender doesn't look at the bank statement and actually take a look at those line items, it's kind of like an attorney, right? Like, I actually had a friend that went to court, and they had to it was family court. And so it was about child support. And the line items that he had been charging on his credit card, anybody would overlook and just be like, okay, these are just charges. The lawyer actually Googled all of the actual merchants and found out he was using child support money for strip clubs.
Wow.
Mm-hmm. So a regular attorney or a non-thorough attorney might have missed that, right? But that information, right, put him in the doghouse, right? So when underwriters go in, they're actually Googling merchants. They would do that. And they will sit there and try to figure out, like, oh, for instance, the child support payment keeps looking like, if you pay it to like the organization yourself, it shows up as that merchant on the credit on the bank statement. And if the lender misses it and you don't tell them, they'll hit you and say, hey, Jess, your borrower pays $1,000 a month in child support. We have to count that against their debt to income. Now I'm getting hit with an $1,000 hit out of nowhere. And so are you. Well, kinda, because we didn't factor that in, but you knew about it. But, going through the bank statement prevents all of that. So I'll go through it. Anything over $1,000 that you receive, I have to source that, right? Because again, they're looking for mortgage fraud, money laundering, RICO. They're looking for all that. So, because people traditionally funnel dirty money into real estate. That's always been a thing. Anybody watch Snowfall? So yeah, like, that's where he put the money, didn't he? Like, he was like, he's big in his drug money, and the first thing that they start doing is opening up real estate channels and buying buildings and
don't give
flipping.
away all the game.
I mean, I'm saying, like, so because real estate has been a wash for money traditionally, that is why they're looking at you as guilty until proven innocent. They're just not saying it out overtly, right? And so with that, I actually go through the bank statement and I'm going to have the conversations. I only look at the last 2 months.
You go through the entire bank statement?
Yes.
Wow.
It's not that long. It's probably like, most people's bank statements like 2 pages. And then the rest of the last 2 pages are like disclosures and disclaimers.
I guess.
So honestly, all you gotta do is
I
just
spent
go
too much
down the
money.
thing. Yeah, honestly, all you gotta do is just go down the thing. And
My bank
honestly,
statement
like
be like 10
if I start
pages.
seeing like large transactions, like money going out or money coming in, I start looking at it harder because I mean it's better that I catch it before they do because that's how it works.
Because you might have some people that, instead of spending money at the strip club, they might be making the money at the strip club.
So there's nothing wrong with it as long as we can source it, right? That's why they started giving strippers the ability to have licenses, because previously they were having issues buying houses.
You gotta be a license to be a stripper.
Yes.
Oh.
Yes.
They want taxes.
Yeah.
It's a business.
Because strippers were also having issues with buying
Should
houses.
I be concerned that there's some women in the room that are certain that they know the answer to that question? Oh yeah,
You
we
didn't
have
know
to.
that,
I mean,
though?
they have to have licenses.
I remember
before.
You know what?
A long time ago.
In 2016, 2017, that's when it started. In 2016, 2017, that's when they started it. And I remember the news report about that. And so that was so that they could have access to things. Like if you have money that's off record, you can't buy anything. And everything is, you can't almost buy anything. And everything has to be paid in cash at that point. Like you would have to go to a house and literally give them $350,000.
So doesn't even want to take cash anymore.
Yeah, I mean, it gets really crazy. So
I'm going back to the stripper license thing.
Yeah, like they had to give those guys some abilities to open up lanes for them, so it's not just done in vain and looking like drug dealer money. So literally,
how do you get a stripper license though?
I don't know. I don't know. Like I don't know.
Probably the county, wherever you get other licenses.
Yeah.
Like liquor lounge here.
Yeah.
Like
You gotta
liquor
get-
license,
Mhm.
occupation license.
So is it stripper license or exotic dancer license?
No, I
Like,
don't know that verbiage.
I don't know.
Whatever is legal in Georgia, that's probably what it.
Right.
However they word it in Georgia.
wow.
But it makes them an independent contractor.
It's a right to work state.
Yep. And it
So we
makes-
go from loans to stripper licenses.
Yeah, we go to that lane. And so, yeah, I mean, basically, like, my job is to make sure that I catch it. We talk about it. I have an answer for it. And that way, when the underwriter asks me about it, we got it. Here you go. And then when that happens, they're happy. I mean, honestly, when you have your stuff and your ducks in a row, you'd be surprised how quickly underwriters turn your files. Like, when you have a loan officer who, like, underwriters, like, take forever on their files and they ain't getting back to you, they probably are a bad loan officer. Sorry. For me, I always have clean files because I believe in putting it all up front so that I don't have to worry about surprises and stuff and people's, dreams and hopes like disappointed because I could have just done little something extra to, prepare them. So if I ask, just go ahead and give it to me because I get people who are like so frustrated sometimes. They're like, why do I have to do this? Why do I have to do that? And I'm like, oh, well, here's the part. If you don't do it for me, you're going to do it for an underwriter. And if
Because you're trying to buy a house. That's why you have to do it.
Man, it's
not
wild.
like buying a cherry Coke at the grocery store where you
It's
just
wild.
get.
And here's the thing, like to all of the realtor world, I can't close on every deal, right? But what I try to make sure of is that the earnest money is protected. Because if your client can just get their earnest money back, we can just go get another house, right? If they lose their earnest money, they mad at you. And how I do that, like right now, I have a property. All of the conditions are cleared. The only condition that's outstanding is a property-related condition. That's the seller's job. Like that's on the seller. If this doesn't come in, then this person should get their earnest money back because it had nothing to do with the borrower.
Right.
That's all I can control. And that's all I try to control. And that's why I asked you for the documents because I want to make sure if no one else is playing ball, if people are not, the numbers of where the appraisal aren't coming in, title says that your seller has a lien that needs to be satisfied, whatever. At the end of the day, you're good though. And that's when I know I did my job.
Absolutely.
Is to protect your interests, is to make sure that when you go for, this loan, all of the contractual obligations are satisfied from just you.
Yeah.
So that's where,
But Jessica, listen, you've given us some great information. Like I don't know if I've had it breaking down like that in a long time.
But this goes to what we were talking
Yeah.
about before and how important it is to have a really good loan officer and not go get your mortgage online.
Right.
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 Right. And to that point, you have the personal connection
Correct. That you
for
can call by
someone
cell phone, yeah.
can
Absolutely.
give you all the
I mean,
information.
in that body touch, like for instance, I had so when I go to lock a rate, for instance, like it's based on certain information. So like if I put in that at that time when we had all the numbers and I locked you, your debt to income ratio was 50%. They make you pay fees or give you discounts based on tiers. So
Mm,
if you are at a debt to income ratio of 50%, you're going to get hit more than likely with an additional fee or an additional penalty for being so close to the rim like that. You're more riskier. It's all a risk assessed based industry. So I ended up having this person locked out at 50%, right? And so then I turn around and I get all these numbers back, homeowners insurance, get them a good deal on that, a premium on that. Um, you know, End up, dropping the loan amount because, it was appraisal variance or stuff like that. And so the debt to income number came down to like 45, right?
mm,
So, okay. So what does that mean, right? Came down to 45. Me as a smart loan officer, I know I needed to go back to the lock desk and go, hey, I need you to give my client back more money because this is
mm.
supposed to cause an adjustment and I'm supposed to have credits given at this point, or at least the fee is supposed to come down.
Wow.
Yeah.
Wow.
They did
Wow.
not notify me. They will not notify me. I have to notice stuff like that and go back and go, hey, you owe me some money.
Right. Right.
Right. So that kind of stuff, you want a loan officer that's that turned on to everything that they can go to people and shake money out of them
Mm-hmm.
because that's what this takes. Like I'm the intermediary between all these people and they could deal with a million files. They're not going to go in and adjust. They don't get an alert for that. I have to say something.
Mm-hmm. Mm-hmm.
Even down to like title, right? Title comes back. They give us the entire package of everything and we just throw it on the closing disclosure. What people don't know is you got lender's title insurance and you have owner's title insurance.
Mhm.
Owner's title insurance is optional. It says it. Like if you get a CD or closing disclosure, in parentheses, it says optional. That's the
Mm-hmm.
only notification you're going to get that particular fee is optional.
Right. Mm-hmm.
And it's a percentage of the loan amount, almost equivalent to almost 1% of the loan.
Wow.
So an
Wow.
additional $1,000 is being tacked on to your closing fees. And if your lender doesn't pick up on it and go, write it like when we go to balance, because that's the only time I can pull it off. Like I
Mhm.
can't pull it off, when we're going through disclosing to you.
Don't pull off on the title
You know,
Right. 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 Yeah.
Exactly. And so they don't pull it off. But at the very end, I have a conversation and I go, let's educate about owner's title.
Definitely.
Because if you want it, cool. But you need to know it's there.
Right.
A lot of people don't even know it's there. So they don't even
Absolutely.
get a chance to go yes or no.
Absolutely.
And a lot of the lenders miss it and don't even have the discussion. So I actually have the discussion. And owner's title, it's one of those things like if you ever got in a car, right, and you get the additional warranty, you got the option to buy the additional coverage.
Yeah.
How many people use it? How many of the times do the situations occur? I got additional coverage on my car and it's supposed to be for like free brakes. My brakes aren't bad right now. It's only been 2 years, right? So literally, I'm not even using the things that I paid additional money for, right?
So I
So
guess it's one of those situations you rather have it and not need it than need it and not have
Yeah,
it.
yeah,
You know,
I mean, and it really depends on the client, right?
Yeah,
Because
yeah.
the lender's title insurance still protects them.
Mhm.
But the likelihood that with all these guys involved, you got your Leah Gurveys,
Mhm.
the likelihood that people create an error recording title is very slim. I'm not saying it doesn't happen. I don't know if you living in the middle of Nowheresville, Georgia, and the closing attorneys are like coming to work a little bit slizzard. Maybe, right? They got that moonshine.
She ain't talking about y'all country Georgia's down there. Country attorneys down there.
Maybe in Braselton, maybe there's like one like
Shots fired.
I just am throwing
Shots
names out there
fired.
that I've never been. Social circle. No, what? Social circle's not bad, but it's like
See, y'all come for
I
her,
feel
not come
like,
for us.
you got Hansville, you got like all these like, Macon. So literally what they do is they have like maybe like one closing attorney for like the entire town, maybe one or two. Where you usually like Atlanta, you got like a lot of them, right?
So it's kind of equivalent to one closing attorney per traffic light.
Basically. And so if I'm living in a very like sparsely populated town, small closing attorney, I probably would get the owner's title, right?
Mhm.
Insurance. But like if I'm in the middle of Atlanta, these guys are like conglomerates, they like know what they're doing. The likelihood that they're recording title wrong is really slim. And then on top of that, the lender's title is going to be the protection for that. So the owner's title is just an additional insurance. My thing is, I'd rather my client know, make their own decision on optional coverage. Lender's title is required. Owner's title is optional. Anytime it's optional, it's obviously not always needed. So at least let you know. A lot of the times they don't even have this discussion. Like I remember calling, my SVP and I'm like, we're balancing CD and I'm like, yeah, could you bump the owner's title? He was like, can you do that? And I said, yeah, it says it on there. Like it's
Yeah,
optional.
it's optional.
But I make sure that the client is aware and they call and tell them I don't want it. So that, there's no, nonsense, right? She's very clear on what's going on here. But I feel like if I've got a client who's like, scraping pennies, if they only have $1,000 to eat off of after I close on them, can I just like make sure that I do this extra step that might save them money? Like, do you want this on here? If not, you're gonna have like extra money so that you can like survive until
Or
the next check.
at least buy them some bread and mayonnaise. You know what I mean? They'll make it
Right.
through a couple weeks until they get
Yeah.
paid again. I'm just
So
kidding.
it's like a real big deal to make sure that you're looking at the fees as the loan officer. I pay attention. Sometimes if there's a variance, I'm going to say something, and I want clarity. At least if you explain it to me, I feel warm and fuzzy. But I'm not just sending like a lot of us just send CDs and we're just not even seeing
Mhm.
anything. And so your numbers are like whatever to them, right?
Yeah.
And if I could have saved that person $1,000, if you could save me $1,000, please let me know.
Right.
So
Right.
for me, if I can do that, then I think that's a benefit. But a lot of folks just don't even notice, and so it's a lot of things that can help out clients when you know better and you do better. So I think that like I said, one loan originator size doesn't fit all loan originators. Like we're not all one and the same. We're not AI, right? Like I don't think we'll ever get phased out with that because there's too much that goes into this job that is relied upon by the bank,
Mhm.
and a lot of it's very discretionary, a lot of it's very trusting. Like for me to get licensed, like when I tell you, they might as well just go up to my neighbors and just knock on the door and ask them who I was when I was a kid, because literally they delve into your life. Like I can't have any collections, I have to have pristine credit, not necessarily a specific score, just can't have anything derogatory. I can't have any kind of past history of financial issues. I can't have a bad background check, can't have any kind of like misdemeanors, felonies, nothing crazy like that. And I get fingerprinted, so they like run me in a database and I'm watched over by, governmental agencies. So Department of Banking and Finance and stuff like that. So literally, yes, like when I go into doing this, a lot of it is not taken lightly, and I really try to make sure that everybody's informed and everybody's getting the best deal they can possibly get and understanding what is going into that instead of me just pushing paper.
Great stuff. And I think those are things that all ships should be taken into account. I mean, going through that whole process
Mhm.
of you have to prove that you are who you say you are,
Yeah.
and have the pristine record to go along with it, and
Mhm.
then you're in a position to have to do the same thing for a client, so you understand what it's like to have to go through the process of presenting to a what's the word I'm trying to look for, institution,
Right.
present to an institution of sorts that you are the person on paper,
Mhm.
that your history matches up with that.
Right.
Along, I mean, just like along the lines of a person that's buying a house,
Right.
and so it's necessary for them to understand that you, if it took for me to get here to be able to help you, the very least you can do is help me get you to where you need to be.
Right.
To
Right.
help.
Right. I mean, but I know that we got a bad rap. I mean, we got blamed for the mortgage crisis. And because of that,
Well, now I was a loan officer during those times, and it was our fault.
well, and here's the
Look, I
thing.
know people that should have gotten loans.
I can't. Well, here's the thing, right? I can't say R because I didn't do it, me
well,
personally,
well,
right?
well,
But what happens is the title. The title has a bad rap, and when
yeah.
that happens, you got clients looking at you like, well, you saying you're the good guy, but they said you was the bad guy.
Well, and I think what needs to be understood. I mean, especially when you're crossing the title of loan officer or loan originator. The thing that has to be understood in those times, we didn't have to be licensed.
Right.
So there was an
There
extensive, there wasn't an extensive background
You could
check.
have worked at McDonald's the week before and started doing your loan.
Exactly. And that plays a major role in the differences of then and now.
Right.
Right. And I mean, we had, and there was a,
requirements for borrowers have completely changed.
Absolutely.
yeah. I mean,
Everything is
during
very,
those times,
very
there was a company,
strict.
the company
I
that
remember
was
the
with,
income no doc loans. I mean, we bought properties with no income no doc loans.
and they called them the liar loan. And I'm like, and people are still getting these loans.
Yeah.
And here's the thing: those of us that were uneducated in giving these loans, it was difficult for us to educate the people on them getting the loans. And I'll be honest, I didn't do a whole lot of loans because I just didn't have the time to go over all the paperwork because it was a lot.
Right.
What was the name of the application?
1003.
1003. Just reading over that thing. I'm like, nobody got time for that.
Well, and we still do. The DSCR is a no income stated loan.
Yeah.
However, the way that they make it strict is they really lay heavy into the property and your credit score. Like you can't get a DSCR and you're not over a 700 FICO. I mean,
and that's for that point alone.
You can, but it's gonna be expensive.
It's that they're evaluating the property, as you mentioned, as an income property. So, but I'm talking before when they were giving loans for people who were just buying properties to live in,
primary residences,
and not even. I mean, we're talking
right.
Working at McDonald's,
right.
Qualifying for a $300,000 house.
Crazy.
Yeah. So, and that's where, again, those of us that were educated, it was difficult for us to educate the borrower on what they were getting themselves into, because the idea was, yeah, you're getting a 1% loan for 2 years, but we're hoping. Some of us were. Many of us didn't care. We were hoping that you'd be smart enough to have your credit and your fund, your money and everything in order.
Right.
By the time that loan,
there was a fiscal
adjusted.
Responsibility that was
Exactly.
assumed.
Yeah.
People are not. That's just generally that's why I don't like giving HELOCs to the average consumer. I mean, I'll give it to you, but I'm not comfortable with it, because if you got a Macy's card and you run that up, 9 times out of 10, you're going to run up a HELOC, because it is literally a giant credit card.
Right.
And then you're going to sit there and go, I have no more money to pull from to be able to do repairs on this house, but now I've got monthly payments coming at me, and I didn't get what I need done.
And I know we play a part in wanting to educate people, but I don't think we can take a significant responsibility in people's willful ignorance, right? In a situation like that, yeah, we see what your history is, and your history states that this is what you have done historically. I'm going to help you to get you in a situation where you might be able to potentially change that type of behavior, but it's still on you.
Screw that. When you're licensed, you're attached to the loan. So if they default, they're coming after you too. They're going to audit you.
Exactly.
So no.
Right.
I'm attached to this.
Yes.
You want to get a loan you can't afford, or it's going to end up being a bad situation. You might want to go down the street.
Yeah.
Because I'm not going to ruin everything that I've built off of one person.
True story.
Because when they come and audit you, they want to see a lot of stuff.
Yeah.
And they don't just audit you, they audit your company. I mean, it's an ugly thing to have a client default the first year.
Wow.
That's what the licensing did. It attached us to the loan.
Yes.
And so when you have a client that defaults the first year, they go right back to that loan originator.
Wow.
And they start combing that file from the appraiser involved to the underwriter involved to see where we messed up at, because then we must have messed up.
That is some really good information to know, because I didn't know that.
Yeah.
Like, I didn't know that you were tied to it.
I'm tied to it.
Yeah.
I'm tethered to you.
Or even if they're late. Right?
Yeah.
Even if they're late.
If they're late, they'll notify me, but hey, your borrower was late on the second month, and you might want to call them. And I mean, literally, like, we're still attached to you, so we don't want to see that. Like, nobody wants to hear that their borrower didn't make the first monthly payment. Nobody wants to hear that their borrower defaulted that first year. Wow. Because the first concern is, okay, so is somebody going to come knocking at my door from the Department of Banking and Finance and want to know what's going on? What
did you do to help facilitate this to make it look
hurts
like
the rating
something?
Of the company. I mean, everybody, listen, I can have a borrower call in talking about, I don't like the appraisal and I want my money back. And I'll have my CEO call me, And I mean, of course, it's always like laughs and stuff like that, because we literally have no control over appraisers. I don't even know who the person is.
Right.
So I can't give you money back. That's why I put it on a credit card. And if it don't work out, call them people. but literally, everything else I'm tied to the loan. And so no, I take it personal when I have a client and I'm giving them a product. But that's what you were saying. Yeah, they weren't licensed before. So you
Yeah.
could give a person a loan, and if you went off in the world and did something else, or work for another lender, they wouldn't find you. They wouldn't attach you to it. They wouldn't audit you. But with me being licensed, they would definitely audit you. And they would definitely wonder what you did when that person didn't pay. So yeah, I'd rather just not give it to you than have a person talking about I'm foreclosing on my house because I got a HELOC and didn't know how to utilize it properly.
Wow.
I'm not, the client that I remember, I had a client, and the conglomerates like your Wells Fargo, your Banks of Americas, and guys like that, they can take that kind of bad flack. I can't take that kind of bad flack. Like, that's why their loan officers are registered, they're not licensed. So they utilize the hedge of the name brand of the Wells Fargo and the Bank of America and all their team of lawyers to protect them. Me, on the other hand, I'm licensed, so I'm out there. Like, if it goes bad, you're looking at me,
Wow.
right? If it goes bad at Wells Fargo and Bank of America, you're looking at Wells Fargo and Bank of America.
Right.
And they're going to go, well, Wells Fargo and Bank of America.
What you gonna do about it?
So I mean, it's a lot. It's a lot that goes into it. It's a lot of risk associated with it, and it's a better, I think, climate to understanding how it works is working on in your favor. Like being ignorant to the process and ignorant to the education of it is no longer acceptable, because they're gonna throw it at you a million ways, and I think that it's overwhelming when you don't know. So I mean, you go throw all that stuff at me, I want to know everything because I'm signing on it.
Wow.
It's not to be taken lightly. It's the biggest purchase of your life.
Yeah. Yeah. So listen, you've given us some great information, and I want to give you an opportunity to share with folks how they can get in contact with you, because you have educated me in ways that I'm like, I don't even know who I'm about no more house. No, I'm just kidding.
Yes, you do.
Yeah. Well, I use different finances anyway. But no, share with the folks how to get in contact with you.
Yeah.
And what you got coming up?
Yeah, so I work for American Mortgage Network, mortgage broker, and based out of California. So our days are longer than 9 to 6. So it works. It's like I still have people that I can call on when files are still like needing to work on it after 6 o'clock in Eastern time. But my email is Jessica. That's JESSICA .Sherard SHERARD at that's Amnet. That's AM as in Mary, N as in Nancy, E as in egg, T as in Tom, M as in Mary, T as in Tom, G as in girl.com. So that's Jessica.Sherard at amnetmtg.com. You can find me on LinkedIn as well. I'm Jessica Sherard on LinkedIn. And that's where I keep it. I don't really do IG with my real estate stuff.
Okay.
So IG is a little bit more like, less formal. So I kind of stay off of that because I'm not arguing with nobody on social media. I'm not doing any of that world. It's very family and fun, right?
Got it.
And so yeah, I mean, it's easy to find me. You got any questions? You're interested in learning more about products? Reach out to me. I'm definitely here. If not to actually get you that house, educate. The more you guys are educated, whether you work with me or another loan officer, you make our lives easier. Our lives are already stressful as it is. So when you know what's going on, you help you and us. So it all is like us rolling a ship here. We get to the destination a lot quicker if you pick up an oar versus me just over here manhandling the whole thing.
So you got to participate in your
yeah.
own rescue.
Yes.
Yep. Save yourself, just as much as I'm trying to save you. So
Definitely.
that's how you contact me. And yeah.
Good stuff.
Good
Good
help.
stuff. All right, Lorraine. I think a speaker for the next Wired event is in place.
I like speaking.
I just had my event on
Yeah.
Saturday.
Good stuff. What do you want to share with the folks before we get out of here?
I'm sorry.
What do you want to share with the folks before we get out of
No,
here?
I mean, I this is
September
why-
23rd. September 23rd.
September 23rd. September 23rd, next Wired event. No, but I mean, that's why I said earlier it is important. That's why most of us realtors have relationships with lenders that we can pick up the cell phone and call, and it's a relationship because you don't get paid either until the loan
Right.
gets to the closing table and the funds are wired. So this was great for our first real life
real estate investing after dark. Yes,
dark,
indeed.
after dark. So thank you for joining us.
Thank you,
Thank you very much for
Thank you.
coming and
Thank
give
you.
us a wealth of information.
Yes.
I'm probably gonna watch this 100 more times.
Learn something new.
Yes, definitely. Well, folks, thank you all for tuning in. Thank you for watching. Please share, please like, subscribe, all the other stuff. Hit the thumbs up. Is it a thumbs up button or the notification button? I'm still trying to figure that part out too.
I don't know.
Whatever
Thumbs
button
up,
whatever
share.
button you got to hit, do all that. This has been the Real Life Real Estate Investing Show, where we talk about real life real estate situations, but we bring you real life real estate solutions. Thank you for watching. Look forward to seeing you soon.
Bye.
Bye.